And so do your homework, think through, approach the right people at the right stage with the right ask at the right valuation based on what the market bears. Entrepreneur, angel investor. That's it. 3 words. Labs is a hybrid venture fund and startup studio. Every year we invest in around 100 startups, mostly marketplace startups, and we build 1 or 2 startups de novo. Again, mostly marketplace startups in the US. And to date, we've invested in over 600 startups and have had over 150 exits. I would argue I've failed my way to success. The people imagine that people who are successful have a straight line up towards success, but in fact, it's many ups and downs. And when I built my first company, which was Auckland, in 2000, after the bubble burst, essentially failed, lost everything, went bankrupt. When I created my next company, I invested every last penny I had. It was impossible to raise money in the early 2000s, and so the entrepreneurship is a constant stream of failures. Most things you try fail. Most ideas you try fail. Most product decisions you make are wrong. But that's the beauty of it. Like, it's all multivariate testing and iterating. You throw a lot of spaghetti on the wall until things stick. And that's true both as an entrepreneur and it's true as an investor. As you refine your thesis, you refine the approach you have and the way you think about things until you find a solution that works for you. And so I failed my way to success, but I think ultimately through enough failure, I learned enough lessons that I was able to come up with the right strategies for being an effective both entrepreneur and angel investor. So we use 4 decision criteria to evaluate startups at FJ Labs. Every week, all the entrepreneurs that come in are evaluated on 4 criteria. One is, do we like the team? Now, every venture capitalist and investor in the world will tell you, we only invest in extraordinary founders. The thing is, what does that mean? How do you quantify what an amazing team is? And for us, it's really based on 2 fundamental variables, which is the founder an amazing storyteller? And number 2, but that's not enough, because if you're that, maybe you built Theranos, fantastic story, fantastic everything, but not a good business. You also need someone who's going to know how to execute and is super analytical and data-driven and is going to have like the right business model and the right unit economics. And so the thing is, if you only have that and you don't have the storytelling skills, maybe you don't build a great team and you don't raise enough capital and you don't build an amazing company. So you really need both. Second criteria, do we like the business? Now, there are a lot of things that go into making a business attractive or not. Like, is it a large market? Is it growing rapidly? How concentrated is it? But ultimately, for us, it really comes down to, are the unit economics in the business attractive? Can you acquire both the supply and the demand at a reasonable enough price that on a net contribution margin basis, you recoup your customer acquisition costs in the first 6 months, ideally, or less. You 3x your customer acquisition costs in the first 18 months, and ideally, ultimately, you make a lot more, like 10x, et cetera. In fact, the best businesses have something called negative churn, meaning even though they've lost a number of their customers, the remaining customers are buying more and more and more, such that you don't even really know what the long-term value of each customer is. It may be 10 to 1, and maybe 21, et cetera. And number 3, do we think the deal terms are reasonable? Is it the right valuation, raising the right amount of money in light of the size of the opportunity, where the company is, et cetera? And these 3 first criteria, which is, do we like the team, do we like the business, and do we like the deal terms, need to be collectively true. Now, the 4th criteria for us is, does it meet our thesis? We have a perspective of where the world is going. What are the trends in marketplaces? What are the trends in different categories like labor and food and logistics? And is this business in line with these mega trends that we're observing and the beliefs that we have? And today, there are 3 core theses that we have at FJ Labs and a few alternate theses. So one core thesis is the continued verticalization of the horizontal sites. So the eBays and Upworks and Craigslist will continue to be verticalized by niche sites providing much better experiences. Number two, the reinvention of marketplaces such that the new ones, instead of having to do a lot of work to pick your supplier, you just say what you need, the marketplace picks the supplier for you. So Uber, you said, I want to go from point A to point B, and Uber picks the driver for you. And our thesis is you can do this for every category, including high-skilled labor. So we're investors in a marketplace to find marketing experts, so Advisable, a marketplace to find programmers like Comet, where you do not need to do the selection, the marketplace does it for you. And then number three, B2B marketplaces. Now, if you fall in that, we're more likely to invest. You should be contacting the right VCs, the right stage. So if you're just launching your company, you actually should not be talking to a VC. If you just got the idea, like you need 50K or 100K or 200K to get it out the door, that's the love money stage. You should go to fools, friends, and family, beg and grovel. And by the way, don't ask for like 100K from someone. That's too much money and you're most likely going to lose it. Ask for like 5K or 2K from like a lot of people. Get 30, 40, 50K, 100K, get the product at the door. Then you need $1 million to scale it. That's when you go to the pre-seed angel stage. You should talk to a lot of angels. You should talk to the few pre-seed funds that exist, and you raise like a million. At that point, you should already have a core team. You should already have an MVP going, and you're going to use that to scale. Now you have your $1 million. You use it for the next 18 months, and you grow to 150K a month in sales. So now you're like, okay, we found early product market fit. Unit economics pretty good. We found a scalable customer acquisition channel. I need my seed round, 3 million and like 11 posts. That's when you talk to people like FJ Labs, and it's FJ Labs, it's Slow Ventures, it's Floodgate, Uncork. They're people that are specialized at that stage. But again, you don't just randomly email 50 people. Ideally, get an introduction. But if you can't get an introduction, do your homework. You say, oh, we are a marketplace in the B2B space, and we see that you've done many of these. We think we fit your criteria. We're a seed stage company. This is a traction. And therefore, again, do your homework and show that you understand who you're talking to. That will bring you a lot of credibility and will increase your willingness to talk to you. And so do your homework, think through, approach the right people at the right stage with the right ask at the right valuation based on what the market bears. And so understand what the market bears. And if you need to know what expectations people have, you can find them on my blog. Well, it seems that the approach I'm taking works, right? Like we decide super quickly, we're super friendly, we're focused. Even though we invest in so many startups, we're focused on one business model. And there's beauty in that focus. By being focused on that business model, we understand it better. We refine our thesis, we refine our approach, we refine our valuation, and we create a brand. If you're a marketplace entrepreneur, it'd be silly for you not to come to us. And I think the other principles of like transparency, rapid decision-making, friendliness, and being supportive to entrepreneurs is something people love and has been helpful. And ultimately, the thesis we have seems to be paying out. The approach, the criteria we use for valuation seem to be paying out. Final advice. Decision is speed trumps perfection. So try things, and if they fail, you adjust. It's way better to be decisive and to move quickly, right? If you're an entrepreneur, you're in a small startup, the only advantage you have over an incumbent that has more money is speed. So go fast, break things, figure things out, fail. Don't be afraid to fail. And ultimately, you're going to fail your way to success.